following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 29th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the law of giving and receiving is basic to a life of success. Now, the law of giving and receiving boils down to what I believe are the following 9 guidelines. Really great guidelines. You ought to jot some of these down, or all of them down, quite frankly, on a pad of paper. Guideline number 1, to bring blessings upon yourself, all you have to do is bless your neighbor. To enrich yourself, all you need to do is to enrich your neighbor. To honor your neighbor, well, guess what? The world will then honor you. Number 4, love, folks. Love is found by doing one thing only. That's called giving love. That's right. Love is found by giving love. The measure of man's wealth, well, you know, is the measure of the wealth that he or she has given. Now, that which you take away from anyone, guess what? The world will take away from you. Number 7, when you take the first step towards that which you want, guess what happens? The universe will take its first step to give itself to you. Number 8, this is important. The universe is a mirror which reflects back to you that which you reflect into it. And number 9, love is like the ascent of a mountain. It comes nearer to you as you go nearer to it. Now, if you're not giving, folks, you know what I say? You're not living. In the law of giving and receiving, it's just simply basic to a life of success. Let's go check out the success in the markets here. Well, we did have futures were up. Right now, Dow futures up 10 points, trading out at 14,816. Now we've got the ES Mini. It's flat, down about 50 cents, trading out at 1631.50. NASDAQ futures up 5 points at 30.73. Russell 2000 up 3, trading at 10.17. King dollar up 53 ticks. So we've got some movement in the currency marketplace, in the euro, in the yen. Pound is basically flat out there. So we'll go take a look at the euro yen. Goldilocks back $7 right now, trading at 14.12. Silver off 24 cents at 24.15. Light sweet crude down 57 cents at 109.53. We're going to go hunting for bear. We're going to go see where those bears are hanging out in the market. We can also go look for bulls as well. If we take a peek around the globe, right now the FTSE up 36 points. The DAX is off 10. Over in Asia last night, we had the Nikkei finish up 121 points, Hang Seng up 180, and the Shanghai basically flat. That was off 4 points. Our call-in number, 877-927-6648. If we go looking for bear, well, let's go start off by looking for bear inside the S&P futures contract here. Let's look at the 30-minute chart, and where the bears are hanging out, it's about as easy to identify as you need. That's right up here. There's this little bearish engulfing candle. It took place yesterday at 2:30 in the afternoon as the futures the futures actually got up to the level of 1639.25. Did that at 1:30 in the afternoon. Then we started seeing these small-bodied candles. Boy, you get 2 small-bodied candles out there. It says be careful if you're long. Could be a pause. Could be just some energy building out there. In this case here, well, that candle, that little bearish engulfing, which was a big bearish engulfing candle. Remember, when you're taking a look at charts, it doesn't really matter what time frame it is that you use. Stay inside that time frame. It'll give you all the messages that you need. Take a look at this bearish engulfing candle. How many candles engulf? 1, 2, 3, 4. You think that's sending you a little bit of a message out there? Well, that's where the bears are hanging out inside the market. That black line, the bearish engulfing, you're going to use somewhere in the range of 1639.25. That's the high of that 1:30 session. And remember, I always say you can lift that bar up or down just a little bit. Don't worry about being the exact penny or the exact tick out here. Take a look at, also you had on that 14 period, relative strength indicator was getting up towards what? Towards that overbought level, got up to about 66 or so, 65, 60, somewhere around 66, a little over 66. And this morning here, coming into the time frame of 8 o'clock, looked like the market was perky. Looked like the market was going to move higher. And what did it do? It ran right into those bears. So I know right now exactly where the bears are hanging out in the market. Is that important? It most certainly is. Because if the bulls are going to try to overtake that area, you'll need to see a close above, and we'll use the number of 1639.25. If, in fact, that were to occur today, what that will do is that'll set up a move up to about the 1645 level. Certainly it'll run into some resistance right around that 200 period exponential moving average right around 1641. But the bears, we know exactly where they're hanging out. I mean, it is as simple as we can get out here and take a looking for the bulls and the bears. Now, where are the bulls hanging out? Well, the real bulls are hanging out probably right back here in this candle session at 10 o'clock yesterday morning. Saw that little bullish engulfing candle as the market had opened. And so I would say the bulls are defending that 1624.75 level. Right now you've got the ES Mini trading into that high volume bar. It's trading in there on light volume. We'll see what happens when the floodgates get open here at 9:30. We'll see if there's a push down to 1624. Looks to me like there likely will be. Now there's this little hammer candle right out here. This formed the potential C point of the A to B equals CD up. That took place last night at, 2000 hours. What is that? 8 p.m. So you got a very small little hammer candle out there. Small little bullish engulfing candle right here back at the 11:30 time frame. But all that did was that set up a move here, up towards that area where the bears are hanging out. But right now we know where that's at. We're going to call that 1639 in the marketplace. That is on the ES Mini. Now, let's go take a look at the larger term time frame. Let's go take a look at the daily chart for the S&P futures. Let's go see what they actually are sending us as far as a signal is concerned. So let's pull this down here. As we take a look at the S&P futures, we're going to see that very clear descending price channel that price is traveling within right now. We can see that what has also occurred was a clear break of the trend line. Now, the trend line that I'm using is the one that's coming off of the November 16th low. So you'd use the low of that 1340.25, and go ahead and use the December 31st low as well, 1383.50. And that trend line, remember, on the push down back here in June 24th to be exact, what held was the actual trend line. So that level held. What we have seen now take place is that trend line was busted. And the trend line was busted on August 27th. And yesterday, it looked like price was going to try to get back up inside it. When you break a trend line, what happens? And what you've got on my screen here is both the trend line and the channel line. When you break either of those or both of those, price is going to try to get up and see if it can get back in there. See if it's got any friends. Of course, all the friends up there were pushing it down. That's what we saw. We saw a rejection of that area yesterday. So far today, we're seeing another rejection of that area. And price on the daily chart, it is not an oversold condition. So, again, stay within inside the chart it is that you are trading here. It's moving towards an oversold condition, but that is to be expected inside a bear market. In a bull market, when things get into a overbought condition, they can stay there much longer than just a quick reversal out there. And as in a bear market, the exact opposite is true out here. So we can see clearly here, and we also know that when it comes to our Fibonacci relationships here, that price is traveling below the 0.382 retracement. It is unusual. It is very unusual for price to just stay kind of mid-stroke here. So if price is not going to stay mid-stroke, what does it want to do? It wants to move down and test that 1611 area. Does it need to do it today? Absolutely not. We're now ending summer. We're about to end summer out here. Well, some of us here in Florida, we have summer what seems like about 365 days a year. Not much of a change of seasons out there, but that's not really true across the country here. So we are seeing really the last weekend of summer, a lot of folks out at the beach or wherever they might be, out in the mountains. That's a good place too. And So we do see that descending price channel. That's what the ES Mini. Let's go take a look at weakness and strength. Let's go take a look at the Dow futures out here. That's going to be our weak link in the marketplace. Let's go see what the Dow futures are doing. Dow futures, now what they did yesterday, or very close to it, was really tested the top of the June 24th candle. That high, 14,731. We'll see when we go over to the diamonds. We'll go check out the diamonds. In fact, we'll do that next. And so this is where it's kind of an interesting market because we saw the diamonds, we saw them move through the B point. That was, by the way, August 22nd out there. We saw the diamonds do that with volume. Yesterday, though, just as we see here in the futures contract, and we didn't get the complete test. Again, 14,731. Yesterday's move down was at 14,740. But when we take a look at the diamonds, you'll see that they actually did test that swing point, and they did it on lighter volume. So I could say, okay, what the market's going to do is what? Build a little energy by moving sideways. In the case of the Dow futures, as you take a look at it, it most certainly is in the oversold territory. So it does need to move sideways here, maybe with the threat of whatever military events might take place that the U.S. would participate in overseas here. Maybe it looks like that's being pushed off for a week. So maybe if that's being pushed off for a week, quite frankly, that's probably not very good for the markets here because what will happen as we take a look at the weakest link in the chain here, which is the Dow, what we'll see it maybe do is just simply work in a sideways consolidation range for several days here and do what? Work off some of that oversold condition enough to go ahead and complete its A to B equals CD down. And by the way, that just the 1-to-1 A to B equals CD down, and this is where you start getting into some potentially dangerous territory because it'll take you back underneath the October 11, 2007 swing point high. And that could signal that it was a false breakout. And we'll have probably two because we'll also have the S&P. The S&P is going to join along. And that, too, we'll go take a look and see where the ES Mini futures, give me a second here to pull that up. 1576, I believe, is a number. When we get back, we'll go confirm that. 877-927-6648. Be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and thanks to everybody out there that has signed up for the virtual trading competition. $10,000 in cash awards, 70 total prizes, 10 overall winners going to receive cash prizes up to $3,000. 10 runner-ups are going to receive an autographed copy of the best-selling book, The Art of Timing the Trade. Each day, 5 randomly drawn winners are going to receive $100 each, just simply for placing a trade. Now, the key here is that you've got to sign up by a week from today. So, you got a holiday coming. It's easy to forget. If you're hearing my voice right now and you're near any kind of computer, that includes all those smartphone devices, stop right now, because it only takes about 15 to 20 seconds to go ahead and complete the sign-up process. You must be signed up by next Thursday, September the 5th at 12 noon. Otherwise, you just simply will not be able to participate in what is really TFNN's best competition giveaway program, the whole kit and caboodle. So please do yourself a favor, get over and do that now. Let those folks at TFNN know that you're hearing my voice doing that right now. I certainly would appreciate that. Now, the number here on the ES Mini, 1586.75, and certainly the A to B equals CD down will take us into that level as well. And that's really important because that means on 2 of the indices, one with 500, one with 30 stocks in it, what we will see is we'll see price get back into that October 2007 area, and it gets to be a little bit dangerous there, because that could suggest that these moves, these breakouts, were actually false breakouts. So we'll just have to really monitor the situation. But, folks, that's really where these confirmed A to B equals CD downs will go ahead and take us. And so yesterday's move, yesterday's bounce, small bounce, that was absolutely to be expected. I mean, probability-wise, it was in the cards, and that's really what it is that we saw. So today, even if we can see the Bears take over, or the Bulls, I should say, go ahead and get above that, 1639 type level. Well, you've got a number of different patterns that are forming. One at 1645, that would create a nice Gartley sell pattern. You 1651. But, right now, the way that the Bears came to work here, looks like the Bears came to work early. They're getting rid of their positions. Folks are wanting to unload and head to the beaches out here. And maybe that's what we're seeing with folks coming to work early. Time to get your work done, get out of the office, and go enjoy the rest of the weekend holiday out there. Now, let's go take a look at the currency market. I did mention there was some movement in the currency market. Well, the King dollar is on the move higher. See if there's any kind of volume behind the move. So far, about 20,000 contracts here. But let's go take a look at the actual currency pairs, see what they're doing. It's going to be the euro that is putting the big oomph into the U.S. dollar index. The euro up here has been trying to take apart this, and this is going to be important today. So this is the first time. This is important, folks. In my opinion, this is important. Let's take a look at that swing point from June 19th. Now, a lot of time left in the trading session here, but today what we are finally seeing here, actually, what happened with the euro is it was pushing higher, pushed right into resistance. Resistance of what? Resistance into a bearish engulfing candle up at a swing point where you're going to make, where it was making 100% move of a move. Had every indication that it wanted to really bust it out to the upside there. Price has been traveling with inside the swing point of June 19th. That's very important. The low is 1.3260, the top of which is 1.3415. You know, as long as you trade inside a swing point, I really don't know. You know, it suggests that, okay, it wants to continue to bust it in the direction that it was coming from. In this case here, it was coming from the lows out there. Now what we're seeing here this morning is we're seeing a break of that area. Let me update this chart. I don't know that it was updated here overnight. Let me make sure. There we go. That's better. And so now we're seeing a break of that area. If we've got a break of that area, then what we will see inside the queen here is we'll see a move down to at least the 0.382 level. That will take you down to 1.3184, but more likely what you would see it move down to is the 0.618 area, 1.302. That'll put some energy into the U.S. dollar index, which obviously that's just a basket of currencies. The other portion of that basket, well, being the pound, being the Japanese yen. Let's go take a look at the U.S. dollar, Japanese yen out here. That's got that Gartley buy pattern, so that is still in place out here. If we take a look at the retracement that it has done thus far from high to low, it has made the 0.618 retracement. It did that here back on the trading session of August 23rd. At this stage here, it's looking to me like the U.S. dollar Japanese yen wants to actually continue to move higher, because what did it do? It got up to that floor, got up to that 0.618 level, and then it just simply backed off. Yeah, a couple little dojis out there, and the trees were, the leaves were falling off the branches here on August the 27th. So really until we see what happens, how this candle here gets resolved, that's the August 27th candle. That'll provide us with more information, but really looks like the U.S. dollar Japanese yen will take another swing for the fences and head up to about the 100.29 area. When we get back, we'll go take a look at how these markets are going to open. Then we'll take a look at Goldilocks, silver, light sweet crude, anything else you'd like. Just give us a call, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow down 8 points, the S&P off 1. Composite up 3, Russell 2000 off 18 cents, Apple on the move up $2.40, Microsoft flat, Google up 2.30, Cisco up 2 pennies. Lead the charge to the upside. It looks like it is Methode Electronics, MEI is the ticker symbol. Must be some kind of buyout or something going on here. Let me expand this out on my screen here, make it a little bit easier for my eyes here. Let's see, what do they have? Are they just out with numbers? Because it's up nice 34% out there. Looks like it may just be their numbers. Their net sales up 40%. We're going to peek in on that, and their profit was up $13 million versus 3.9. So MEI is the ticker symbol. One we're going to take a look at. Pharmacyclics, PCYC, up 3% this morning. Guess Jeans, folks fitting into Guess Jeans. We'll take a look at that stock chart, up a nice 11%. That is out on a earnings beat as well. Netflix up $2. Vodafone up $2.50. Deal with Verizon out there. That's what's pushing those two stocks higher. To the downside, the Fresh Market, TFM is the ticker symbol, off 9% this morning, off 470. Signet Jewelers, SIG, down 4%, off $3 and change. A Workday, WDAY, off 3% this morning, down a couple of bucks. You've got Vornado Realty, VNO, off about 2%. Otherwise, things are relatively calm in the marketplace. Let's start now. The very first thing I want to do is update you on Kihu, QIHU out there. Yesterday we were taking a look at a gap down at the open that had formed the most bearish of patterns out there. The island reversal, well, the bulls really rushed in. There is no bearish pattern. That was is no longer an island reversal. As this thing pushed yesterday into a high of 79.60. The low that it needed to hold in order for the island reversal to have been in effect was 77.59. Pushed into that. Not only did it push into it, folks, pushed in with some volume out there. So the pattern here is not bearish whatsoever. So take that off of your island reversals out there, because that just simply is a thing of the past. Now, let's go take a look at Let's go take a look at Guess. Let's go see what it is doing. GES is the ticker symbol. Actually, when it comes to selecting jeans, I actually prefer Guess jeans. Of course, I like the older styles, which I don't even know if they make them anymore, but when it did come to jeans, I certainly did like them. In any event, they are gapping up this morning with some nice volume behind the move out here. So far today, 1.1 million shares. Yesterday made a low of 2.3 million shares out here. This thing had broken down below its last sign of strength. Had a very nice sign of strength on May 31st, 2013, was 6 million shares to the upside. That sign of strength was tested. This is where, if you like to pay attention to these things and write them down on a pad of paper, because on June 24th, when the market was moving lower, Guess was also moving lower, but guess what it was doing? Coming right back into the sign of strength. Got down to 29.43, did it with 922,000 shares. Now, the beauty is, and this thing here, when you come back to a breakout area, let me just go ahead and put the lines out on my chart here. In fact, what I'm going to do is, let me just delete everything. And this will clean up the chart and have you take a look at it. Now, remember, whenever you look at a chart, you always want to understand where those high-volume bars, and, of course, what was behind that high-volume bar. In the case of Guess, it was a high-volume breakaway. So nice wide price spread. In the wide price spread, you don't just look at that candle right there. You got to take a look at where did it close the prior session. The prior session close was at 29.35, and then it closed on the breakaway on May 31st. It closed out at 31.78. That's wide price spread. You can see the volume bar because that's the one that sticks out. Now, what is nice about this thing as it came back to a breakout area is that you're really benchmarking the actual breakout candle, May 31st. But when an equity can come back to the prior session where it broke from, and we take a look at the volume here, I'm going to go ahead and put that across the screen as well. Take a look at the volume. It's coming back with 922 versus the volume of 2 million shares. When it can come back and do something like that, that is a beautiful thing. Now, you'll also notice here what's interesting. It did break a hammer candle, which was right back here on June 21st out there, but still coming right back in. And when you break a hammer candle, when you're long, you're wrong. But what that really also means, folks, is you've got to go take a look at where is the next support area. In this case here, when you're breaking a hammer candle and something's moving down to the low. So when I say you're long, you're wrong, what that means is you've got to go take a look at where's that next level of support. Sometimes it's going to be a swing point. Well, in this case, guess what? The swing point was right there as well on May 29th, right behind it. So it moved below that area, went ahead, moved higher out here. Had some pretty decent volume up on August 1st as it made a high out there. Did it with 1.5 million shares. But, recently over the past few days it has started to back off with some volume. But this morning it's curing those ill wills out there with a nice move higher, already 1.3 million shares. Guess should go and head back towards the highs. Let's go see if there's any other problems out here and Guess. Oh, well, here's the problems. Take a look at that. Nothing like taking the stock chart and pulling it back to the left-hand side. So why is it that Guess stopped where it did when it made those highs back on August 1st? Well, that's because take a look at this high volume low. So this is interesting. See how price here over the past couple of days came right into that supply line. What I'm referring to, folks, is August 24th, 2012. If you go take a look at the Guess chart from August of 2012, what you will see is a huge, we'll talk about wide price spread and accelerated volume. Unfortunately, in this case here for Guess was to the downside, 13.4 million shares on August the 23rd out there. So all that Guess actually did was got back to the area where it had broken down from. In this case was August 22nd, 2012. That high was 34.10. So what could this be setting up here? It could be setting up nothing more than a nice consolidation range inside of Guess, the top of which we know where that's at. And it looks like that's where price is headed to. And if it can't bust them up, what will it try to do? It'll try to go ahead and bust them down. And so maybe setting up a consolidation range out here. Let's take a look at the weekly chart just for the heck of it, as long as we're inside Guess. Yeah, take a look at the consolidation and how long this has been going on. And these patterns are just like all low. Whoops, didn't mean to do that. Just really wanted to draw a line. That's all that Stevie's son wanted to actually do out here. So let's draw the top of the consolidation, which is going to take us into the price level about, we'll call it $34. And the bottom of the consolidation, I'd say the clear bottom of the consolidation that I would use right about there, and that's going to take us into the $24 range. So you're looking at a $10 consolidation area inside of Guess. That is on the weekly chart. Let's go take a look at some of these other stocks out here. Methode Electronics, I believe that is MEI, is the ticker symbol. So that's up on big earnings beat. as well as, at least versus the prior year, don't know what they had guided, as well as revenue. So MEI is the ticker symbol, up on big volume this morning here. So let's go see what is behind this move here. Right now, volume today so far, big volume for this equity. 332,000 shares out there is what it has done today. Had a nice little sign of strength. No wide price spread, though, so you're never sure how to read those on June 28, 2013. You did see a sign of strength with some wide price spread, and that was on June 21st out there. Let's go take this back here, see what this looks like. This may be at all-time highs. Let me put this on the monthly chart out here. Oh, it most certainly is. If we take a look at A to B equals CD patterns, let's see which version this thing is hitting out here. It's today up above the 1.272. That sets up a move into the 25.97 level. Should have no problem getting up there. Looks like that's also going to set up some form of a butterfly pattern. Let's go take a look at that. The 1.618 expansion. Now, this thing has been, looks like an IPO going back to about the 2005 time frame. But everybody in this stock, virtually everybody, not everybody, but virtually everybody is having a good time because they are in the profit mode out here. The 1.618 level is 28.98. You can see 23.34, which it's trading. It's basically trading at that area right now today. But got a wide-ranging bar here for this month of August, and so this is an outperformer of the marketplace. That's pretty important to pay attention to, isn't it? So MEI is the ticker symbol. I know I am going to go over to my pad of paper here. I know I'm going to write this one down and do a little bit more follow-up on this because, you know, what you'd like to do is you'd like to see, let's assume we've got these confirmed, well, not assume, we've got these confirmed A to B equals CD down patterns inside the marketplace. So what does that set up? That sets up you want to come back and take a look at something like this, see how it has behaved out here, because this thing is a nice-looking stock chart, at least as we speak at the moment. That's the monthly that we're looking at, and the daily does not look too bad as well. So I don't know anything about this company, but it is worth investigating, in my opinion. MEI is the ticker symbol. Now let's go back out to the, I mentioned the diamonds earlier, so let's go take a look at the diamonds, because what was interesting yesterday, you know, we've been talking about price wanting to get down into the the June 24th candle. Well, guess what? In the diamonds, they actually did that yesterday. Now, June 24th has 14 million shares, the top of which is 147.43. On that big down thrust that we had 2 trading sessions ago, it was moving down with 11 million shares out there. So it gets down with 11 million shares, actually gets down to a low 147.41, tags the top of that, rejects it. So it's kind of interesting here because you've got a rejection of a swing point on lighter volume on the weakest of the 4 ETF indices structures that are out there. And at the same time, we also have a B point that was crossed with volume. The B point being the August 21st level of 148.50. And that was crossed with a gap down, so you had wide price spread, accelerated volume, 11.4 million shares on August 27th. So all that means, guess what? That means that, you know, a little bounce here. Where could that bounce take us? You know, and that's a really great question. I would say the most logical place for that bounce to take us to could be the closing of the gap, which would be the August 26th low, 149.19. That's one possibility. The other possibility that we're looking at is just simply this swing point, the B point, the August 21st low of 148.50. So we'll see if that area, how this area gets tackled today out there. But we can see is the push into the swing point on lighter volume inside the weak link out here. In essence, it's kind of interesting how the market is setting up here, because we were talking about, or I was speaking to you earlier about, you know, maybe with the threat of whatever military action that the U.S. might take here, looks like that's being pushed off. Looks like it's being pushed off. And if that's the case, the market here, because if you take a look at the Dow Diamonds, you can see how oversold they are, right? So if that gets pushed off, what we really see here is basically, you know, a move sideways. A move sideways to do what? Or even a bounce, a little bit of a bounce out of here to do what? To work off an oversold condition. And you know, folks, unless we see some kind of big volume come in to the upside, I don't suspect that's what we're going to see out here, then what we are just looking at is a market that is really giving you the opportunity, if you are not short, it's giving you the opportunity to get in. You've got to decide where it is that you're going to go ahead and take your positions out there. But if you were bullish, in my opinion, I wouldn't think that the worst is over. In fact, I am certain that the worst is not over out there. Go check out my newsletter this morning and take a look at the study that I did there. And I tell you, that paints a sign for you, folks. If you haven't test drove Mastering Probability, now is absolutely the time to do it. You can get all the details on the homepage at TFNN.com. Just click on my name, Steve Rhodes. You got access to it for 30 days, unconditional money-back guarantee, and you're talking about hours and hours and hours, 30-plus hours worth of training and education. So if you're looking to feed your brain, that is the newsletter service to be able to do that with. Now, let's go check out some of these. I mentioned we'd go take a look at Goldilocks and silver. Let's go see what gold and silver are doing out here right now. You've got gold trading out at a price level of $14.07. Gold here getting into what? Getting into that overbought condition, now beginning to pull back for us. We'll see what kind of candle it actually forms at the end of the day, but we are beginning to see the signs of a reversal signal out here. That reversal signal would go ahead and have gold do a pullback. So it's basically completed the 1-to-1 A to B equals CD pattern. 1441 was the target. We saw a high yesterday of 1434. If this is the beginning of a retracement, the retracement ought to take us back to about the 1336 level. 1336 will be nothing more than a dead cat bounce, a 0.382 retracement of that entire move out there. So look for gold to pull back here, give us another nice opportunity to get in on some great mining equities. Yesterday I mentioned, I implored people, please don't, if you are still in your mining equities, to tighten up your stops and don't buy into that early bounce that we saw inside the marketplace. Let's go take a look at what actually took place inside the GDX yesterday. I must have that somewhere on my screen here. Let me see. Where is that? The GLD, the nugget, there's the GDX. So we take a look at this. And the reason is that because the action that we saw 2 days ago, folks, that was very bearish action out there. We had gold moving up. It didn't close at its session highs, but it still moved higher. That was on August 27th, and we saw all of the mining. When I say all, let's call them 98% of the mining equities just simply go ahead and sell off. We got that key reversal session out there. I'm not the only one that noticed it out there, because yesterday we saw a bit of a bounce, and then I don't know what time it was in the afternoon. It could have been maybe around 2 o'clock or so in the afternoon. We saw those equities also sell off. So folks are paying attention to that. That says that the GDX is going to go ahead and pull back. And the problem yesterday was it was similar volume. This was volume lower. So the GDX was pushing volume higher on August 27th, but yesterday, guess what? Similar volume and pushing lower out here. The GDX is going to go ahead and pull back. Probably a deeper retracement than any of us think. Deeper retracement would be what? Probably down to about $24 and change. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 29 points right now. S&P up 3. NASDAQ up by 20. NASDAQ 100 up 18. New York Stock Exchange up 10 points out there. 397 net advancing issues. In order for the bulls to actually take control of this marketplace, that we would need 2,599 net advancing issues out there. I don't expect that we will see that occur here today, but it is good to know what is going on. As far as the VIX index, that is down about 28% up. About 28%, 28 cents, down a little under 2%. Let's take a look at silver right now, trading out at $24.09. We may begin to start seeing silver pull back. It completed the almost 1 to 2.618 A to B equals CD. It did run into that resistance area of that 200-day exponential moving average. So that has acted as resistance. Pull back in silver. If we take a look at the A to the D point that it made, the low to the high out here, the dead cat bounce will take us into about 22.47 out there. So expect a pullback to that area as the first target. We take a look at light sweet crude. Light sweet crude tried to form a huge shooting star candle yesterday. Take a look at that. That says you've got some significant resistance at that 112 area. Price tried to break out of that 7-point trading range to try to get above the 109. We'll call it 109.30-ish area. It actually closed yesterday at 109.48. That's not a breakout in my book out here. Today, you could see, in fact, if it closes today below 109.22, you will get a shooting star, which is a single-day reversal candle, as well as a bearish engulfing candle today. So you'll see that it's got some pretty significant resistance up at that consolidation level at 109. Now we'll call it 109.50, 109.40, 109.30. Doesn't really matter. That says that, guess what? Light sweet crude should move back down to the 102 area. Stay inside that consolidation, because if you can't bust them up, what's it try to do? busted down. I guess to a certain extent the charts are saying to us that, any kind of military action is going to be put off for a little while. And so then perhaps you'll see light sweet crude travel all the way back down into that 103-ish range. That is the 7-point consolidation that it is traveling in. Let's go take a look at bonds. James Bond out here. Bonds are pulling back here this morning. A likely target for bonds. They made the dead cat bounce this morning down at that 132.03 level. I would say bonds could pull back into the 131.08, maybe 130.21 and form an A to B equals CD up. Yesterday I was speaking with a caller. I can't recall which caller had called now about the bonds, but we were taking a look at the fact, we mentioned that it looked like bonds would most likely set up an A to B equals CD up. That would take it right into the resistance level of about the 135 area. So just a normal pullback into the 0.618 or 0.786 level gives you the 1-to-1 or 1 to 1.272 A to B equals CD. And thus far, that's what it looks like bonds are going to do. I'd be very careful once they get up to that 135 level because that'll be, again, another test of that larger consolidation in the marketplace. If we take a look at natural gas out here, natural gas having another strong day out here, so not backing off once it had that little dark cloud cover candle at that 0.618 level and continuing its move higher. Looks like $3.68 is on its way. So let's see, what are we going to be paying attention to today? Well, let's go back over into that 30-minute chart. Let's go take a look at the EKG of the S&P futures contract. Let's go see where the bears are hanging out. Take a look at this price here so far during this 9:30 to 10 a.m. session, pushing up into the 1638.50, right where the bears are hanging out. So when we begin the next hour and through the next hour, we're going to see if the bulls can take over the bears. If they do, you will see the ES Mini move up to about the 1645 level, but they've got the fight of their life on their hands. Folks, it's Terrific Thursday. Many of you may be starting your holiday weekend a bit early. If you are, travel safe, be great, be safe, and look forward to seeing you, well, when you get back from vacation. The rest of you, I'll see you in just a few minutes. Take care, folks. Have a great Thursday. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.